initially Europe underperformed in the back end of last year, but has really turned that around this year as the implications have become clear. But what I do think investors are going to have to keep following is the fact that we're seeing earnings downgrades for this year. So it's going to be some time before we actually see contracts coming through to businesses and the implications from a corporate profitability perspective of the package that's been put through in Germany. And we've got the unknown, of course, of April the 2nd of how hard hitting the tariffs are likely to be, what sort of response there will also be from Europe. So I think there could be a case of, buy the rumor, sell the fact in Europe, and that there may just be a few more headwinds in the next couple of weeks to what we've experienced so far this year.
But the kind of money we're talking about, Lindsay, and the kind of valuation differentiation we've talked about, the historic differential between the pricing of US equities compared with Europe especially, plus the fact there is policy uncertainty for all those US companies, whereas actually Europe is getting policy certainty from a government in Germany and from a commission that are going to chuck at this, quite frankly, in total, if it happens, trillions of dollars. Very hard to say this trade is done, isn't it?
Well, I'm not so sure, partly because if you look at the valuation differential, it's there for a reason. It's because earnings growth in Europe has been miserable compared to the US, really over the last decade. We don't have the same exposure to tech, of course, that the US does. And we've had lower GDP growth within Europe. There are a multitude of other reasons going against Europe. You've got horrible demographics. You've got horrible government deficits as well. The US is far more in control of its destiny with regard to that. And we've had that ongoing bureaucracy in Europe where it's just very, very hard to move forward. So whilst it's encouraging, I think, to see Brussels talking about buying defence, for example, centrally, there's a lot of sounds that, are encouraging. The reality is just the fundamentals haven't compared well. And when you look at the valuation of Europe compared to history, it's kind of there and thereabouts, it's average. So, I'm certainly encouraged by what we're hearing. I think things are improving for Europe. At the same time, things are, of course, weakening in the US. But I'm not getting overly excited as well that we're about to see, double-digit returns out of European stocks this year. We have to keep real about this.
Lindsay, I want to ask you about what we're dealing with in the States and whether that can affect animal spirits, because to me it seems as though we're still dealing with the fallout from some concentration risk. That was one of the big themes in recent years, whether it was Mag 7 or just even a single stock, and that was Nvidia. And then we had a show and tell yesterday, the stock didn't do much, and it feels as though that there is a very big problem in the room, which is that concentration story. How much more of the selling has to flush out at this point before we are dealing with a healthy market?
Oh, well, that's a good question. The Bank of America Merrill Lynch survey did indicate that investors have moved enormously out of US stocks in the last few weeks to a net underweight position now, which really surprised me, to be honest. I think there's more selling to be done in the US, though, because, the bad news has been in some of those tech valuations coming back down to earth in some cases. I suspect some of those have been overdone. Some of these businesses, Nvidia grew its earnings like 50% in the last year. It's really not a particularly expensive stock, given the growth that's coming through there. So I think there's a risk of throwing the baby out with the bathwater when it comes to the Mag 7. But I think what we haven't seen is broader selling in the US. When you look at the equal weighted index, that's only down around 1% year to date. I think we are seeing signs of weakness, though, in the US economy. We are seeing signs of a slowdown. And to me, it's more even of whether there will be a recession there in the next 12 months. So, I'm not holding my breath on Europe turning around, US turning around in the short term. I think there could be more cracks emerging and that could prompt further selling.